Carlyle Group is a private equity firm with a market cap of just $8 billion. The company is an American multinational private equity company and asset management firm founded in 1987 that has participated in numerous large acquisitions. As we will see throughout this article, Carlyle Group's impressive portfolio and potential future earnings make it a strong investment. Carlyle Group logo. Carlyle Group portfolio. Carlyle Group CG is a leader with an impressive portfolio in private equity. The company has astounding equity of more than $201 billion with available capital of $73 billion. Carlyle Group Portfolio Overview. Carlyle Group Investor Presentation. Carlyle Group's assets under management are incredibly significant and give the company an advantage for two reasons. The first thing to understand is when hedge funds operate, they take two kinds of fees from clients. They take flat fees, which tend to be a percent of the assets, normally on the order of 2% a year. They then take performance-based fees, which are a percent of the profits, on the order of 20% a year. The next thing to keep in mind when analyzing these numbers is that Carlyle Group is a $8.11 billion company with a P/E ratio of just under 8. From total assets under management of $201 billion, that means that Carlyle Group will be earning $4 billion annually in just fees. Very impressive for a $8 billion company. On top of that, the company has significant potential from performance fees. The company has $73 billion in available capital and $128 billion invested. The combination means that the company has a significant base to earn money off of, and the money it earns could be huge. However, as a downside, it also means that the money the company earns could vary significantly from year to year. But if the company continues to grow assets under management, that could mean a huge bonus. Carlyle Group recent earnings. Carlyle Group investor presentation. Carlyle Group's significant source of earnings are appreciation of its carry fund, or the fund that holds that 20% of income on profits. That fund has had 17% gains over the last 12 months, and the company's net accrued performance revenue is $1.8 billion and has increased by 25% over the last 12 months. These are some significant assets for a $8 billion company. Carlyle Group potential future earnings. Another thing to look at is the strength of the company's fundraising plan. As we discussed above, given that the company has fairly tight margins, and given the relation between its assets under management, $200 billion, and profits, $1 billion, the company is sensitive to stock market drops, and drops in assets under management. As a result, the company has been undergoing a $100 billion fundraising plan. The company has raised $65 billion so far, including $48 billion in 2017, and anticipates it will have completed the financial raise by year-end 2018. That's an impressive amount of capital that will provide the company with a 33% increase in fee-based annual income alone, not counting the potential for additional income from profits. Carlyle Group fundraising strength. Carlyle Group investor presentation. Here, we can see that the company's assets under management peaked towards the middle of 2014 before dropping significantly to a late 2016 low of almost $160 billion. Over the same period, the company's stock price dropped by almost 65%, showing the impact of a drop in assets under management on the company's stock price. However, it also shows how a reversal in the company's fortunes can help the company. There is another negative though, where the company's assets under management have yet to recover. However, the company has another $27 billion in pending fee-earning assets under management, assets that will take the company over its late 2014 highs. That recovery in fee-based assets could help the company's stock price recover significantly, which it is still almost 40% below. That recovery could help Carlyle Group's potential future earnings increase significantly, and help make the company a great investment for future investors. Another source of future earnings for the company, on top of growing its assets under management, is increasing its profits from its current assets. Carlyle Group LTM earnings. Carlyle Group investor presentation. Carlyle Group's economic income has changed by 68% over the past year, which has tracked to a 30% increase in distributable earnings and a 14% increase in distribution per common unit. At the same time, the company's net debt investments net accrued carry have increased by 61%, or $2.6 billion, helping to support the company's financial portfolio going future. As we can see here, we have a $8 billion company, with a single-digit P/E ratio compared to the S. At the same time, that company is growing its earnings in the mid-double digits and has a pending $27 billion increase in fee-based assets. The combination of these things should increase the company's earnings and help highlight how good of an investment the company is. Carlyle Group performance. Carlyle Group investor presentation. Putting all the company's numbers together, Carlyle Group continues to have strong performance on the money it already has. This has led to strong investment performance, with the company's last 12 months carry fund appreciation being 17%. That significant carry fund appreciation will mean significant profits for Carlyle Group should the company choose to cash out. On top of this carry fund appreciation, Carlyle Group is scaling its investment platform and believes it will raise $100 billion in new capital. That capital raise is on the back of the company gaining traction by building a global credit business. That credit business and traction will mean a significant increase in fee-based earnings, which the company anticipates will be more than $300 million by 4Q 2018. That means the company's fee-related earnings alone will give the company a P/E ratio of less than 27, comparable to the S. That doesn't count any of the company's growth or performance earnings potential. Carlyle Group business segments. As we saw above, Carlyle Group has strong potential future earnings combined with an incredibly strong portfolio. Let's finish up by discussing the company's business segments specifically, along with the future that I think they have. Carlyle Group corporate private equity portfolio. Carlyle Group investor presentation. Looking at the company's corporate private equity portfolio, the company continues to scale while maintaining strong long-term performance. The company has seen assets under management drop slightly while the company's total assets under management increased significantly. This has resulted in economic income increasing significantly going into 2017, surprising given that these assets were not fee-based assets. As an investor, I like to see fee-based assets. Fee-based assets produce strong and reliable cash flows, and those strong and reliable cash flows lead to strong and reliable earnings. And then success with its investments can only mean additional upside past that. However, as we can see, the company has managed to keep income high despite the new assets not being fee-based. Carlyle Group real estate business overview. Carlyle Group investor presentation. The company also has a very strong real estate-based business. Here, the company's fee-earning assets under management have also remained stable. However, the company's total assets under management have also grown. Personally, I think that the real estate business is a very attractive market going forward. The United States needs new and affordable infrastructure, and there could be many opportunities here. Looking at the natural resources segment, the company has $6.2 billion in available capital, which it has found new opportunities to invest in at a 1Q 2018 record of $1.4 billion. The company is creating a new global infrastructure fund to take advantage of these opportunities, and that could mean significant long-term earnings and profit for the company going forward. Personally, I'm excited about this new fund. Carlyle Group Investment Solutions Overview. Carlyle Group Investor Presentation. Next in the company's 4 large business areas is investment solutions. Here, the company has also been growing assets under management to almost $50 billion, while fee-based assets under management have remained constant. Here the company has finished finalizing fundraising for the latest ALP Invest secondaries and co-investment programs, for more than $9 billion. Going off of what I talked about above, where I'm a big fan of increasing fee-based income, which I believe provide additional stability, there's some very exciting news here. The company has new commitments that have a higher fee yield and as a result expects effective management fee rate to rise over time. That increase should help the company's stable income to grow in the coming years. Carlyle Group Global Credit Platform Overview. Carlyle Group Investor Presentation. The last of the company's four main business units is its global credit platform. Here the company has remained committed to enhancing and scaling its credit platform as search for yield intensifies. That, I believe, could drive significant capital towards the company, especially as its high-fee CLO, collateralized loan obligations, business expands. Another impressive thing to see here are that out of the company's four business segments, this is the only one where increasing assets under management has correlated to increasing fee-based assets under management. That means increasing earnings for Carlyle Group going forward and should help Carlyle Group to reward investors well going forward. Conclusion: Carlyle Group is an asset management firm and one of the best. The company has had strong earnings recently and on top of those earnings, the company has strong growth potential going forward. The company anticipates to raise another $35 billion this year, which could help to increase profits by low to mid double digits depending on how the company chooses to use that money. On top of this, the company has a growing carry fund. That carry fund, based on the company's strong returns, makes up a significant and growing portion of its value. Personally, I think additional growth here, as the market remains strong, could be one of the company's largest assets. As we can see, the company's impressive portfolio and potential future earnings make it a great investment. Disclosure: we are long CG. I wrote this article myself, and it expresses my own opinions. I am not receiving compensation for it, other than from Seeking Alpha. I have no business relationship with any company whose stock is mentioned in this article.